Hey guys, it's James, and have you ever found yourself wanting to start investing, but then you find yourself buying something, holding it for about a month, and then you get bored of it and you want to invest in something else, but you can't settle on if you should buy ETFs or if you should buy an individual stock, and then you jump in and out of your investments based on an article you read or a YouTube video that you watch? Well, today I want to explain why you do that and how to stop it. So I have put together a spreadsheet that has broken down investing styles into 8 different buckets, and I wanted to share that spreadsheet with you. And I want to share, it's actually a quiz, and I want to share this quiz with you for free. All you have to do is click the link in the description. It's just Google Sheets. You don't have to sign up for anything or go over to Patreon for this spreadsheet, although I do offer spreadsheets over on Patreon. This spreadsheet right here is free. So let's jump over to the spreadsheet and check it out. And here we are over on the spreadsheet. If you simply click File and Make a Copy, you'll be able to copy this over to your own Google Drive, and you'll be able to make changes. As we answer these questions over here, you'll see it'll start to change, and depending on your answers, it'll tell you what type of investing style you are more geared toward. And these are based on how educated you are in the stock market and how much risk you want to take. Here on the y-axis, high risk to low risk, and on the x-axis, higher education to lower education. So what does this mean? I've based these questions, just a simple 15 questions, on your risk and your education factor. And when I say risk, I mean how close are you to retirement? How close are you to actually having to pull the principal out of your portfolio? How much money are you willing to risk in your portfolio? Are you willing to withdraw your money within the next few months or the next few years? And how understanding are you of that the market could drop and not come back for a while? And then this education score right here is based on how good are you when looking at company financials. Do you know what to look for in a company? Do you know the difference between a dividend stock, and a growth stock? Do you know what the difference between an ETF and a stock is, and which one you should pick? And other things like PE ratio, dividend yield, market cap, outstanding shares, and valuation models. So these questions will kind of quiz you on your stock market education as well as the risk that you want to take. Now, in my opinion, these are just kind of an overview or a name that I would put to somebody who would have this style of education and this amount of risk. And when I answered these questions, I find myself to be a growth investor. I like to invest in things that are going to give me the best return overall. I'd like to invest in things that are going to give me the best return over the next 10 to 15 years. Things like Microsoft, Apple, Nvidia, Tesla at one point. I like to invest in high growth ETFs like QQQ. So let's just touch on each one of the 8 different buckets of investing. So you can see the different colors here. I have green, and I would say green, these type of investors, they're aware that their money is losing value based on inflation, and they know that they need to have some type of investment where they take their money outside of their savings and they're getting more than basically nothing on their money when they have it in the bank. So they know that they need to beat inflation somehow. So we have our hands-off investor and our income investor. If we go over here, we can just check the profiles of each one of these investors. Hands-off investors, they understand that their money's value is shrinking due to inflation, but don't understand enough about the stock market to invest in individual stocks. Some may go to a professional to handle their investments, but some are not trustworthy of another person handling their funds, and they would rather invest in money markets, CDs, and high-yield savings accounts. So that's someone who's typical of a hands-off investor. Someone who would be an income investor, they understand the stock market well enough to be buying securities with a small portion of their portfolio. They tend to look at high-yield ETFs such as JEPI or SVOL, and the higher the yield, the better. But they're still very risk averse. They want somebody else handling their portfolio, a money manager that has been in the game for a long time. The next in this line would be an ETF investor. A large portion of their portfolio are going to be in ETFs that they choose. They understand the difference between picking high yield ETFs and growth ETFs, and they go to ETFs as they believe they will produce a better return than what a financial advisor would do without the fees. So blue chip investor is our next investor. So this person knows that, if they buy an individual stock, they might be able to outperform a certain ETF, because inside an ETF, there are individual investments that might pull the entire weight of the ETF down and stunt its growth. So a blue chip investor is smart enough to go after stocks or individual companies that are long-standing. So let's just read this here. Invest in a long-standing, strong company. They understand the value a company provides to the economy, and they want a piece of that company. These companies have probably been around for over 75 years. These are your GEs, your companies like 3M, JP Morgan, Coca-Cola, Pepsi, and some of the larger snack companies like Campbell's Soup. This investor begins to look at various stock market financial data like PE ratios, and they consider buying based on analysts' ratings. The next up, we would have our dividend investor. This person is slightly more educated than a blue chip investor. This person is going to start to get into the nitty-gritty of the financials of a company. So a dividend investor will look at the dividend of a company and see this as one of the premium metrics of a company. It's very risk averse and pretty solid investment. If the company is growing its dividend, then the company must be growing. They'll invest in companies that are growing their dividend, but understand that they can beat the S&P 500 by about 0.25% or 1.5 times the S&P 500 if you just buy ETFs such as SPY or VOO. And if done correctly, over a long period of time, they'll beat the S&P 500. Now, growth investor, I would put Warren Buffett somewhere between a dividend investor and a growth investor. When he first started out, he was probably more of a swing trader than day trader. Not so much day trader, but probably more of a swing trader, a growth investor. But I would say he's kind of settled down here near the dividend investor, growth investor. So dividend investor, I would put them someone buying an Altria group that has a 9% dividend yield. And a growth investor, I would say someone who's buying Apple and Microsoft that's growing about 30 to 40% per year over the last few years. So a growth investor is going to look at the company financials, their earnings report, cash flows, and any other metric that would tell them this company's doing well. And a swing trader. So the last two buckets, I would kind of put them in the same style, but I did separate them out because a swing trader is a little bit more risk adverse than a day trader. A day trader, it's kind of their full-time job. They're going to trade between around 9:30 and 4 o'clock. They're going to trade when they can. They're going to get in and out. A swing trader is going to be a little bit longer. They're going to trade over a period of a week, anywhere to 2 to 3 months. So coming back over here, and if we zoom out and see the whole thing, I've grouped day trader and swing trader kind of in the same bucket. Growth and dividend investor, just depending on how much risk that you want to take, would depend on if you are over the line or under the line. So if you want to try to figure out what type of investor you are, download this calculator, click the link in the description, and press File, make a copy to make it yours so you can edit it. Answer the questions and head down into the comments and let me know which type of investor you are. I do offer spreadsheets for a paid subscription, multiple spreadsheets on one workbook over on Patreon. I only have one tier at the moment. I try to make it simple for everybody. I do also offer a free calculator, a 401k investing calculator over on Patreon. You simply find it by clicking through the filters right here. And just a sneak peek of what that calculator is over on Patreon, I have my compound interest analysis calculator where we can change the monthly addition and your annual growth rate to determine what you would have over the course of the next 10 years. I do have an additional 401k calculator. It's a little bit more beefy than the free one. I have a portfolio analysis where you can take the different percent holdings of different stocks that you buy, put the dividend yield and expense ratios in, and it'll spit out a value of what you would have over the course of 25 years, depending on how you split your portfolio holdings. I also have a portfolio tracker As with all my spreadsheets, you change the things in the yellow colored boxes in the yellow areas, and the green areas will change themselves. I do also have a valuation spreadsheet. This is more for my dividend investors. I do have a watch list, and I have a budgeting spreadsheet. So head into the description and download the free investing style quiz and leave a comment with what type of investor you are. And with that, thanks for watching.